Hi everyone, Robin Moser, Anna Taryn over here with another special guest, Ian Watts. We are here for season 2 of the Tipsy Realtor, but today we are going to make a great cocktail called the Suffering Bastard. I personally like serving this cocktail to my husband because it makes me giggle.
Well, there goes an idea.
And we're going to talk about how bankruptcy affects your ability to buy a house and basically how to get past it and actually get to buy a house, because that's always the most important part, is to put the bad stuff behind us and move forward, which is what 2022 is going to be.
Yay! So exciting. I know we already were having way too much fun here at the backstage, so to speak, when we were setting up. And if you guys remember, Ian has been on our show back in July. He is vice president with advanced mortgages.
Advanced mortgage, that's right. Yes.
Advanced mortgage.
He stood in for me while I was away in probably Costa Rica.
I wonder if anybody noticed.
Yeah.
Of course they did.
So we all gonna be enjoying the Suffering Bastard while Ian gonna tell us about life after bankruptcy and how to apply for a mortgage. So
absolutely. I have tons of questions, just so you know, like tons of questions.
All right, well, let's get cocktail rolling.
Okay, cocktail. So this cocktail is pretty simple. It is no shakers needed required, just a glass with ice, tall. You're going to want a tall glass. It does have a lot of ingredients. And what I really like about this cocktail...
I feel like it's after work.
Well, what's really cool about this cocktail, though, is it was actually made and invented in World War II as a hangover cure. So I'm not suggesting to get hungover. Of course, drink responsibly. But that is actually the history of the Suffering Bastard. Yeah. So we're going to go with our 1 ounce of bourbon. And again, we're using Elijah Craig because that is the best bourbon at a reasonable price that's out and about right now. We also have the Eau Claire Gin, so a local distributor, which again, we are always of the opinion that you should try and do local.
And now you can actually find them in select liquor stores, and I saw them at farmers market.
Absolutely.
Before you actually had to drive to Black Diamond?
I don't know.
Turner Valley?
Turner Valley, yeah. So I actually went and visited and did the tour. Yeah, so it was pretty fun.
It's such good gin.
All right, so then we got bitters in. And what kind of bitters are we using? Are they orange or just kind of the multi... Angostar automatic bitters?
So, put it all in, stir it up. Okay. I threw in the ginger ale, stir it up, and then you can actually garnish this with a mint leaf. You can garnish it with an orange. We're going to garnish it with a twist of lemon, and that's our cocktail.
And now cocktail's already ready. There you go. Well,
so,
cheers.
It's like just easy enough that you can make with a hangover.
Yeah, exactly. After work, as I said, I was like, after a hard day at work, you run home and you put ice in a glass.
That's pretty good.
Is it good?
Yeah.
Oh my God,
that's delicious. Kind of reminds me of like a Long Island iced tea a little bit.
Yeah, it is quite
I don't know why, but I thought it's going to be sweet, and it's not sweet.
No,
it's not.
It's wonderful.
Yeah. See, it's good for like if you have a tummy ache, right? Because you use ginger ale in there.
Oh.
It's a medicine.
It's a health tonic.
It's perfect for me today. We're always
looking
looking at the healthiest choices for your Wednesday lunch.
Exactly.
So, and it's a liquid diet here.
All right.
Yes.
Bankruptcy.
Okay.
Now that we're suffering. Suffering, cheers.
Yes, cheers. Yes.
Cheers to the Suffering Bastards.
Yeah. Oh my God.
We should have made this in November for war veterans.
Much like a hangover that this is the cure for, there is a cure for the hangover of bankruptcy as well. So it's not the end of the world. If you are bankrupt, the first thing to do is get discharged. Right. Once you're discharged from bankruptcy, we have options. So
what does it take to get discharged from bankruptcy?
So you typically need to make an agreement with your creditors, go into maybe a consumer proposal, and make sure you've got that kind of set up. And then once that's taken care of and you've paid that off, you can then discharge the bankruptcy. So it'll...
I have a question. I heard that a consumer proposal is worse than bankruptcy when trying to apply for a mortgage in the future.
They're very similar. The one factor that is worse than anything is if there was a property involved in the bankruptcy. If there was a foreclosure as part of the bankruptcy, no lender is going to want to lend you again because you let that mortgage lapse. So if you're going into bankruptcy, make sure you sell your house and pay off that mortgage, and then you can write the other debts off in your bankruptcy and then recover.
So is a consumer proposal a bankruptcy then? Is it a version of bankruptcy, or is it something different than a bankruptcy?
It's technically different, but in the lender's eyes, it's viewed very much the same. So it's not much difference.
And is it true, like I heard that you have to have X amount of years before you can, like, between you did the bankruptcy thing to your application. I think it was 7 years. That's what I heard.
So
But correct me if I'm wrong.
you're partially right. 7 years is when the bankruptcy falls off of your credit report. So then it's not really visible anymore.
Oh,
But we can get you a house much sooner than that.
Okay.
So,
How much sooner?
Like 1 day after you've discharged your bankruptcy.
Really?
We have alternative lenders that will lend to you. You do have to have 20% down to access those lenders.
So a little bit more down payment.
And you're going to be looking at a slightly higher rate. Not astronomical, not a private lending rate like 9% or 8%. It's going to be in the 3.5 to 5.5 range.
Okay.
And what we would do is set you up with them for probably a 1 or 2 year term while we rebuild you and get you ready to move over to a
Right, so you kind of have it like you get like 1 year fixed or open mortgage, depends on the rate. And
So how long though did it take? So like if I declared bankruptcy today, how long would it take for me to hit a discharge?
That is entirely dependent on the terms that you come to with your creditors. So
it depends how much money you probably start making, so you can pay
it off. So you may go into a consumer proposal where you've kind of written off some debts, amalgamated some others, and turned it into this one payment that you're paying. It depends on how high that payment is and how quickly you can get rid of it. So once you're out of that bankruptcy, that's when the clock starts. So you do have to be discharged first, and unfortunately the timeline is going to be different for everyone depending on their situation.
And while you're in bankruptcy, you can't get new debt, right?
No, you do need to be discharged
to get new debt.
Yeah.
Yeah.
I don't think anybody even gonna give you like a credit card.
Most likely no. There may be some few loan sharks out there that will, but not the kind of credit card that you want.
And just to be clear, loan sharking is 60% or higher on an interest rate.
Good job.
I know. I
There you
remember
go.
my real estate training.
Another healthy tip for today.
Anything under 60% is not loan sharking. So there's a lot of room to move there on interest rates.
Absolutely. There's a lot of room.
That's hilarious.
Once you've hit that 2 year period after discharge, now your options really start to open up more. So we have some top tier lenders, even local credit unions that will consider your file. And after 2 years, you can also entertain putting less than 20% down again. We can look at insured mortgages of 5 or 10% down. The key is you have to have reestablished credit. So you need to have 2 trade lines, and they have to be active for 2 years.
What's a trade line?
A trade line is anything like a credit card, a car loan, any sort of active line on your credit bureau that's currently in use. Not something that's a closed account, but a new account you've opened since discharge. One of them should be with a major Canadian lender, like one of the top 5 banks.
Car loans are pretty easy to get, though, aren't they? Because like I walked in for a car loan, and I feel like they asked for like nothing from me, and then gave me like a huge car loan.
If you have a pulse and a pay stub, pretty much you can get a car. So that's a good place to start. And then with the history of paying that for a few months, then go to your CIBC or your TD and try and get a credit card from them. Once we've got those 2 trade lines for 2 years, our options really do reopen, and we can look at going to a much better rate option.
So you have to show good behavior.
We do. We want to show that you've fixed your problems, and we want to explain why they're not going to happen again. So, lending is usually objective, but when it comes to bankruptcy and bruised credit, there's actually a subjective portion. So
the 5 C's.
The 5 C's. You know you're lending. You know you're lending. So character is one of those C's. And it's actually really important. So when we tell the story of bankruptcy, if you were helping an aging parent or a dying relative, or there was like a really legitimate reason for what you went through.
Like COVID? That's not a legitimate reason. It's also a C.
The 6 C's of credit.
The 6 C's of credit.
That's a different category.
Actually, depending on your industry, that could be a valid reason too. But once it matters, the story does matter. So I always say, treat your broker like your lawyer, tell them everything, and then we'll make sure we tell the right story to the lender to get you approved.
Yes, and that's why it's actually really important to work with the right professional, because the building up the character is very important, because it goes from the mortgage broker to underwriter, who the person who actually put the stamp of approval on. And the more the mortgage broker knows, then better he can paint the picture about you and your family.
Well, and realistic, if you think about it, as realtors, we market houses trying to make them look the best. Technically, a mortgage broker is actually marketing you to get you the best rate, the best terms. Although you can't use best, sorry. They can't use the term best. It's under our regulations. Yeah. But to give you that impression out there that you meet the 5 C's, and one is character, the other is credit, collateral, capacity. So capacity meaning like you actually have the capacity to pay back the debt. And then what's the last C? I always miss the last C.
Credit, collateral, capacity.
Character.
And the last
And I've forgotten it. I've been doing
And
this
it's not
for 2
COVID.
decades. We're
So-
calling it COVID today.
But so they're marketing you, right? And they're putting you out there so that people want to lend with you, and so that you can get favorable terms for you. So they're basically marketing you.
And it's important to get the story right the first time. Because if you go to a broker and they don't tell the story properly,
There's
but
no
it-
second chance.
but it goes to the lender and then it goes to an insurer,
and then they find something.
and then if you come back to me and I say, well, it should have been structured this way,
Yeah.
but I don't send it in, the insurer will say, well, we've seen this file already, and
Yeah.
somebody said something totally different than what you're saying. Even though both may be different variations of the truth, if you don't structure it properly the first time, it can cause you really big issues.
And you can't keep things back from your mortgage broker, because the moment that you start keeping secrets from your bank, that's called mortgage fraud. And we don't encourage mortgage fraud in any way or shape or form.
You know, we would fire you as a client pretty fast.
Yeah.
There
Exactly.
You
So
go,
you
so
want...
think about full disclosure, right?
Yeah, absolutely.
Our industry works in a full disclosure. We have full disclosure to you as our clients. So same here, like we are a team, right?
Yeah.
We talked about that last episode, how the whole process of buying and selling home has to be a teamwork.
Yeah.
And that's part of your job as a consumer to tell your mortgage broker exactly what you have done so far to get the mortgage and what they should know.
Exactly. And then they're going to present, and they'll tell you this information is valid, this information is invalid, and they'll tell you what needs to be presented and what doesn't.
Yeah. And remember, there is a confidentiality clause. Everything you tell your professional, the realtor, the mortgage broker, it stays confidential between us. Nobody allowed to get access to that information without your permission.
Absolutely.
We protect that with our lives.
Yes.
And our license.
Yes.
Our lives and our license.
Very important.
Yeah.
So, anything else about bankruptcy that you think, like coming out of it, how to get past it, things that they should know if they have to go into it, if that's a decision that they're making?
If you have to go into it, just know it's not the end of the world.
Nope.
You know, sometimes it's actually the best thing you can do. Just don't let that property be part of it. Make sure you sell your house and pay off your mortgage creditor. The other creditors are a little more flexible. That's not such a big deal. You do want to reestablish credit as soon as you're discharged. Make sure you get that credit card and another loan immediately, because it does take 2 years of good repayment
Yes, so
history
be
to access a
proactive
good
in
rate.
fixing your own credit.
Don't wait, and don't get just one thing, because I've had people come to me 2 years after discharge, but they've only got one credit card, and now I'm, can't help them as much.
Do they count if they do phone bills or utilities or any of that kind of stuff?
Typically, they want to see actual trade lines on your credit report. In rare cases, if it's a very strong file otherwise, we may be able to consider an alternate credit source, such as a utility bill, an insurance payment. But that's not what they're looking for. That would be an exception. So the rest of the file has to be strong.
Now, you brought up having to sell the home. Now, obviously, a lot of times when people are in bankruptcy or getting close to bankruptcy, they've refinanced their home to the maximum capacity that they can. And there is little to no equity in the home. And in order to sell it, they have to do what we call a short sales. Can you explain what a short sell is and how does that impact them?
You mean where they don't have enough equity to cover, so they basically are going to be short and have a shortfall.
And they still have to
close.
pay the fees.
Because
on
when
closing.
they get these bankruptcies, and what we didn't bring up, if you do own a home and you do have the capacity to keep it, you can keep $40,000 of equity within your home and keep your home. So you don't have to get rid of the home if you're able to make those payments, right?
Yes, if you can structure it that way and you have the capacity to repay it, that is potentially an option.
Yeah, and then that would that go to your favor if you got to keep your home and continue to pay your mortgage and pay out the bankruptcy?
It looks a lot better. It looks a lot better because you were able to mortgage lenders they're looking at your history, but they're really looking at your mortgage history. So if you were able to maintain that, that says a lot about your character and how you were able to navigate that bankruptcy.
Yeah.
So it definitely looks good.
And also, there's one other thing. So with the banks, you can keep the $40,000 in equity in your home and keep your home, but your mortgage doesn't show up in your credit rating. Am I correct on that? Unless you've defaulted on it.
That used to be true.
Did they change it?
That has changed. So within the past few years, all mortgage lenders have started reporting all mortgages on credit reports. Now, your particular mortgage may or may not have shown up on your report yet, depending on how proactive your lender has been with their reporting, but that has changed. So, I think it was a smart decision because a lot of people try to hide properties and mortgages that they have. So it makes sense. And I think it was only a matter of time, but that has changed and most mortgages do report.
Okay, yeah, because I do remember when you couldn't see the mortgage until
and that's why they always asked if you own or rent, because they couldn't tell.
But now they can. So,
okay, well,
but that can help you. Like you said, if they're able to keep that mortgage or keep the house, that's a trade line on your credit report that's going to help you. So that may allow you to buy another property once you've come out of that bankruptcy or consumer proposal.
Yeah.
Okay.
Yeah, because we have to remember, not necessarily like all people are bad in paying their bills. Sometimes things do happen.
Life happens.
You know, like life happens. Exactly. Sometimes life happens in the worst kind of case scenarios, which you can't even cover it if you do have a good job, right? So I think it's important to kind of, get advice from professionals in terms of like what can you do prior that life happens to the worst.
Well, and the one thing to remember is real estate is gray. Nothing is black and white. Don't think that just because it was like this for one person that it's like this for you. What you need is you need to come and talk to myself, or you need Anna, or Ian, and have a conversation with us, because the world of real estate is gray. We live in a gray world in real estate, and it's just us navigating through the gray.
And as you can see, some of the policies are changing, so you never know how that could affect you as well. And
talk to us sooner rather than later.
Yes.
That's
right. I was going to say that's actually the one thing is, again, if you're about to miss payment on your mortgage, you talk to your bank or financial institution before you miss the payment. You would be amazed at the amount of things that they have for you that they can actually help you either not miss the payment, not start defaulting on your loan, all that kind of stuff. So the banks are amazing, because here's the reality. They actually don't want your home. They don't want to have to take your home into inventory. So if you're about to miss a payment, call your bank. They can do a skip a payment. They can, with COVID, might be able to add it on to the end. There's all these kind of things that they have in place. They have a massive toolbox of ways to help you. If you're talking in a and I hate to say it, like a bank, so TD, RBC, blah, 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 and you're just talking to like a person at the teller or a normal personal banker, and you feel like you're hitting stone walls, ask to talk to the bank manager. Or go to a different branch and ask to talk to their bank manager. Don't just take the first answer that gives you. I hate to say it, I am the queen at pushing the crap out of my bank to do what I want, because I know how it works. So when I don't get the answers I want, I'm always talking to the bank manager. And I know which branch I can go to get the bank manager to help me, and which branch I can't.
Oh, yeah, absolutely.
Talk to your broker too.
Talk to your broker.
Even if you're with a major bank, we can often help facilitate that conversation. We have relationships at the branch level too, so we'll do anything we can to help you.
And if you're an insured mortgage, talk to CMHC, right? Or you're insured, because the insurer is going to take the property if you default on it. So although, let's say, RBC or TD may not be able to do anything or won't do anything, your insurer of CMHC or GE Capital or
Canada Guarantee, Sagen, or CMHC.
There's tons of them. So any one of those, talk to the insurer, because they're going to do everything they can to ensure that they don't take the property, because nobody wants your house unless they have to.
Exactly.
Keep that in mind. Nobody wants to take your house from you unless they absolutely have to, but you have to get on it before you miss the payment.
That's very true.
That's the huge thing.
The sooner the better in the case of everything. If you don't have a house and you've gone through a consumer proposal, or you're midway through one, don't wait until it's discharged to talk to your realtor or your broker.
So
let's make a plan
for the future. Yeah, absolutely.
Yeah, let's start early, because it's never a no. It might be a not right now, but here are the steps you need to go through to get to where you want to be. Yeah. It's never a no.
Yeah, and my favorite statement is, if you fail to plan, you plan to fail.
Exactly.
So true.
All right.
Okay. Amazing.
Prize time.
Those are great.
Thank you so much for
gives a lot of hope for people who need that help and reassurance.
Cheers.
Yeah, this is really good. It surprised me.
All right. Prizes. So it is Rocket Ship January.
As you can see, Robin's still very excited about the prize that is coming out this month, Rocket Ship Shaker.
Well, all I imagine, honestly, if I had friends, I'd have my little Rocket Ship Shaker. I'd be like so cool making my cocktails.
Oh, yeah.
Little Elton John playing.
Yeah, exactly. Well, that's what she was singing on the last show. By the way, if you didn't know what she was doing, she was singing Elton John, the Rocket Man.
Yes.
So that's ours. So if you you share our videos on all social media platforms that you see it: Facebook, Instagram, LinkedIn, YouTube, and did I miss something?
We're going to be on TikTok soon.
Yeah, we're planning for TikTok in 2022. Finally, we're going to be TikToking. together.
I haven't figured that out.
Yeah.
We're gonna.
I did a couple of run videos last year, but that love it, share it. Your name's gonna go on the list on the first week of February, and if you do it more than once, your name goes more than once. So.
Okay, and next week's show, Pim's Cup, and we're talking about future construction and real estate trends. So this is what's happening in the future because we are in January, so we're forward focused.
Exactly, and if you are planning to do any kind of construction and you're wondering what is hot on the market right now, well, we'll
And
talk
what is
about it.
not.
Yeah, it's not hot.
All right, but of course, if you're looking at buying or selling any real estate in the next 6 to 12 months, or your friends or families or coworkers or neighbors or anyone you talk to, please make sure that they call myself and Anna Terranova at the number on the screen or visit our website because we would love to help you. And I know Ian would make sure that you get the right information to get the best, or I can't say best, sorry, to get the
Most favorable
things for you. And we would love to help you, and we are here for you. Even if, you know what, you got a question and you're not buying even 2 years down the road because you're looking through bankruptcy, call us. We want to help.
Yeah. Let's get planning done, right?
We
the
do.
Strategy. So.
We want everyone to be successful because it's more fun for us.
That's right.
Start early and you have a better chance.
Exactly. Thanks so
Okay.
much, guys.
Thanks,
Have a great
guys.
day. Bye.
Bye.